Welcome back to Again Mac. We're going to continue to talk about the definition of money and different types of money in our economy. Okay, so now here we're going to a little bit expand one more characteristic of what we talked about in the previous video, which is some of the difference between commodity versus fiat money. So the two extremes of the types of money looking historically in the U.S. Okay, so for example, we know here that in a commodity money situation, the government money, the currency for the economy is actually based upon a commodity, right? So gold, for example. So it's very dependent on the availability of gold, and those coins are made out of gold. So unless there's more gold, you can't really produce any more coins, right? So one thing that we can note is the lack of control of central authorities of the economy over those types of money, right? So here's a question. Suppose new gold is discovered. What would happen to the value of commodity money made out of gold? Okay, so take a moment and think about this question. Imagine a country adopts a gold as a nation's currency today. Okay, if an explorer finds a new location, let's say in West Virginia, where there's a lot of gold that can be extracted, okay, that would definitely increase the supply of gold in the U.S. economy, right? Given that such information, what can we expect? Now, take a minute, pause, and see if you can get to this conclusion by yourself, and then we'll come back and further digest this exercise, okay? Okay, hopefully you had some time to think about this question, and let's look at it. Okay, so imagine here the supply of gold increases, right? Here we assume that the demand has not changed because the only thing that happened in this case was that there was more gold being found by this explorer. Okay, so what would happen to the value of this currency at that point, right? Well, if the demand is the same, but the supply will increase, right? That means now that the same demand, given the same demand, right, the value of each unit of gold is going to go down, right? There's the same amount of goods and services in the economy, but now there's more gold chasing after those same goods and services. It looks very similar to what we talked about before, right? The definition of inflation. Right? So in this case, an increase in the amount of gold in the economy, holding everything else constant, right, will lead to a decrease in the value of gold in terms of its purchasing power. Okay, so in this case, the answer is B. Okay, and as always, let me know if you have any questions about those as we move forward. Okay, so of course, one of the things that we need to specify here is that fiat money gives the ability of the central authority, in this case, the central bank, to be able to control the amount of money in the economy by simply printing more money, right? Remembering that the valuation of this currency, of fiat currency, fiat money, actually comes from the belief of the population of how much that's worth, and not based on the cost of production or the material used to produce that dollar bill. Okay, so there's even though we have control, remains a question: can we properly control the money supply to result in more efficient economic outcomes for everybody? Right. What about moving forward? Right. Despite what we just talked about before, there's also new monies coming in right now. Right. So after 2007, there's a lot of Bitcoin talks and cryptocurrency talks. Right. During the financial crisis, a lot of people maybe thought that private monies, which are made by private institutions rather than central banks, right? And that's an important differentiation to make, right? The dollars is printed by the central bank in the U.S., not by a private firm, right? So in this case, it's important to mention here that Bitcoin is different in those terms. But as the video here will show, and you can feel free to join and take a look at it, right? This reporter goes around and tries to make purchases with both gold and Bitcoin in today's economy, and you see whether or not that's possible. Right. So let's go through let's apply what we've been talking about so far to see how we can apply the concepts that we learn into our lives today. So is Bitcoin, can Bitcoin be a unit of account? Yes, right. You can count one Bitcoin, 1.5. It's you can split into decimals, of course. Can it be used as a medium of exchange? Technically, you can. Yeah, nothing stops it from being used, from being exchanged for goods and services, except the acceptability of people. Right? I'm not going to be able to exchange that for goods and services unless the seller of the good or service that I'm purchasing accepts my type of money, right? My type of the payment method that I want to use and the funds which those access, right? And is Bitcoin a standard deferred? Is it a standard deferred method of payment? Well, not really, right? As you can see here, and as I already pointed out, the variation of the value of Bitcoin in terms of it's the US dollar has changed a lot over time, right? And you can see, especially, and I said 2007, sorry, I mentioned 2017, when that exploded, right? and you can see that the value of Bitcoin went really up. People started thinking that was going to emerge as a new type of money, and even maybe take over the dollar. But as you can see, the fact that it's not very stable causes that not a lot of sellers want to accept as deferred method of payment, because they don't know if they're going to be able to purchase the same amount of goods and services over time, right? You live in the U.S. economy. You accept your Bitcoin, the Bitcoin of somebody as a payment when it's worth more than $50,000, right? Less than in a year later, that's all the way down to 5,000. So you lost a lot of purchasing power with your Bitcoin during 1 year. Would you accept Bitcoin if you're a seller? Ask yourself that question. That usually helps us understand some of the imperfections of that type of payment and money. Okay. So what would happen if money just became worthless? So this is just a quick Rick and Morty video that I think is pretty funny, that kind of highlights how crazy it would be if out of nowhere the US dollar went from being worth $1 to $0, right? Not be able to purchase anything with them. Would we go back to barter? There's a reason I have been a barter, right? Maybe other types of money would step in and then play a role that the dollar has today. Okay, so it's good to think about what is happening today. Can that change for the future? And what would cause it to happen, right? So that's the goal of this class.